But right now, it's the economy. I almost said stupid, but I don't know why. But Dr. Brian Long has, he's the Director of Supply Management Research at Grand Valley State University, and we've spoken with Dr. Long many times. And what he does is he actually calls area manufacturers and finds out what they're ordering, what they're up to, and gets a pretty accurate way to kind of predict where we're headed economically in the short term. And Dr. Long, welcome to the show. It's nice to have you here once again.
A pleasure to be with you again today.
The new report just came out, ended February 28th, and looks like shows a little improvement.
We got a little bit of a bounce as far as the month of February was concerned. January wasn't bad, but I guess I have to say February was even a little bit better. We're still in this pattern of fairly slow growth that we've been in for roughly 7 years or so now, since the end of the Great Recession. But it's good to see that things are still headed up.
Absolutely, and things, just like before, look a little rosier for the Grand Rapids and Kalamazoo areas than they do for Battle Creek. Any thoughts about that?
Well, part of it is, of course, just the mix of companies that you have in these respective areas. In particular, the case of Grand Rapids, a lot of the gain in the last 7 years has been in auto parts and in office furniture. Office furniture, of course, took a big hit in the recession, but has bounced back nicely. We're pretty much to an all-time high as far as the office furniture business is concerned. As far as auto parts, we're way ahead of where we were 10 years ago. In fact, the employment situation in both Ottawa and in Kent County is running 15 to 20% ahead of where it was 10 years ago. And we don't have any other major counties in the state that have had that kind of a bounce.
And, of course, we have a pretty good automotive-related industry here in our Fort Custer Industrial Park. They are constantly looking for people to work at places like Denso and other related companies.
Yes, very much so, but they are an international bunch of companies. Tokarica and Denso are international companies, and they did not expand at the rate that some of the companies did in Grand Rapids. Obviously, they did very well, but they seem to have a policy of, well, we've gotten as big as we want to be in this particular area, so we're going to move to some other area. Of course, like I said, they very much maintained what they have, but we didn't get that 20% bounce out of them like we did out of some of the auto parts suppliers over in the Grand Rapids area.
Mm-hmm. What types of industry? Now, you mentioned furniture and automotive. What types of industries didn't seem to be ordering much and didn't show much of a bounce?
Well, I'm going to say we have a wide variety of miscellaneous industries, of course, throughout our West Michigan area here. I can't point to any particular one of them. I guess I have to look at aerospace as being one of them, though, that didn't bounce as much. Obviously, there's been a nationwide bounce in aerospace, but our local companies, I can't say that they saw that 20 or 30% gain that was typical of probably some of the other areas of the country that supply parts to the aerospace industry.
You, in your report, you'll often quote comments from survey participants. And these participants, again, these are the buyers for these companies, correct?
Yes, they are. Mm-hmm.
So they're the ones that have to order, like maybe steel or nuts and bolts or various chemicals or whatever it takes for them to build whatever they're building. And
yes.
It seemed pretty positive, those comments. Are they generally positive, or do they write negative comments on the survey often?
Oh, they will write negative comments when they're negative. They are very honest, and of course, we don't quote anyone as far as the survey is concerned. Mm-hmm. But we just had one or two comments in this last report that were a little bit on the pessimistic side. The rest of them are either stable or quite positive about the outlook for the future. And in fact, one of the statistics that we collect is in a business optimism index, short-term and long-term. We hit a record high on our short-term business optimism index this past month.
Well, that's fantastic. And also, I see a little bit of a trend where if you've mentioned short supply on some items.
This is typical of when the market starts to heat up, particularly the industrial market. The other thing that's when short supply heats up, the other thing that heats up is prices. And we have prices going up for almost all of the major industrial commodities right now. Now, unlike 50 years ago, it doesn't immediately spill over to the consumer market. Right now, we just have the major components, particularly things like steel and aluminum, which you would expect are going up right now, but so are all the plastic resins. The west side of the state of Michigan is a large area for molding plastic parts. We have an expertise in that area. You know, you think it's a very easy business to do, and it's like everything else. It's not as easy as it looks. And as a result, all the major plastic resins are going up in price. But then packaging is going up in price. Anything related to corrugated, most of the other metals are going up in price too. Zinc, copper, tin, nickel, all going up in price at a fairly dramatic rate right now. And, of course, our local firms are concerned, are they going to be able to pass these price increases along? If it's automotive, unfortunately, when they go to pass it along to the Detroit 3, they just get stonewalled and they have to absorb the increases. This is not a positive trend as far as this month's survey is concerned.
Well, we're expecting a large shipment of Chinese steel here in West Michigan soon. Did you hear about this? One of their satellites, an 8-ton satellite, supposed to fall out of the sky, and they think it might not all burn up and land somewhere in Michigan.
Oh, gee. Oh, gosh. The amount of steel that we are importing from China, of all the steel that we imported in 2016, that's the latest year that we have statistics, of all the steel we imported, 2% of it came from China. So forget the Obama administration slapped a 266% tariff on Chinese steel. And I think everybody forgets about that. You know, now we all hear about the new tariff that's going on steel, and everybody's in a flurry right now. But most of our steel that we import comes from Canada. So,
although
China, it's a minor player.
But some people will say they ship it to Canada, and then so that they got a middleman and kind of avoid things. That there's some of that shell game going on.
Yes, there is some of that, and there's some of that with Mexico, too. I don't think that that's the majority case, because by the time you get done shifting it around, steel is one of those commodities that's expensive to ship. You start to lose your price advantage.
Now, you, along with the information on the latest survey with the economic outlook and business outlook, you sent a 2016 trade deficit sheet that goes back to 1990. And I think as long as we've just touched on that, we'll go into that next, because it's fascinating what I learned just gazing at this chart. That, I mean, you'd think China would be, from the news that you hear and from the things the president says, that China would be the worst offenders. But it's surprising. Dr. Brian Long is our guest. He's an economist at Grand Valley State. In fact, the director of the Supply Management Research puts out the economic forecast plan after talking with purchasers from major industrial companies here in southwest lower Michigan. And that shows a little bit of a bounce. He says that things are looking up. They didn't look too bad for January, looking a little better for February. But Dr. Long, you attached this trade deficits chart, which, of course, is, a major part of the news right now with President Trump announcing tariffs. And so your chart goes back to 1990. I'm thinking that's almost when NAFTA started, like just a little before NAFTA, right?
That is just about that same general time frame. But, of course, NAFTA was just 3 countries, i.e. North American countries.
Mm-hmm. So, and you mentioned China, and we think, China, boy, trade deficit, China is really kicking our butts. But, man, there are a lot of other countries that we have trade deficits with. And we didn't used to have these. I mean, back in the glory days, for heaven's sakes, it was the other way around, right?
Well, following World War II, we owned the world economy. I mean, a lot of the rest of the world economy, particularly the Western economy, had been devastated by the war. We could produce and sell everything we possibly could get out the door. And, of course, Europe bought a huge amount of our stuff to rebuild, but rebuild they did, and now they come back to sell to us at an ever-increasing rate. Just as, for instance, the trade deficit with Germany is 7 times what it was in 1990. You mentioned that I benchmarked to 1990. I just said that was kind of before the NAFTA agreement kicked in. But we've just had a number of countries that we've exploded our trade deficit with. 35, 36 times the amount of trade deficit with Ireland, just as a for instance. Vietnam, we had just gotten over a war with Vietnam. Now we're importing in the range of $35 billion worth of goods from Vietnam. And this just wasn't the case.
That was less than $1 million.
Back in 1990.
Right, it was less than $1 million and 35 times the trade deficit. Now, back in 1990, our trade deficit with China was like $10 million. Now it's what, 350 million?
350 billion.
Billion,
as a matter of fact, 350 billion. It's just crept up on us. Same thing with, like I said, these other countries. South Korea fits in that category. Italy fits in that category. That our trade deficit has just exploded with these countries. And, of course, China is the one that we hear about all the time. But, gosh, these other countries are sometimes not letting us have the access to their markets that they are afforded when they come to this country. This country has a pretty wide open door policy. You can come in here and sell anything, but boy, we go to their countries and they've got a myriad of regulations and barriers that stand in the way.
Well, and that's the president's point that, hey, this is tough, but it's high time we stood our ground.
If we don't, we're selling off our country one piece at a time. 50 years from now, the generation that succeeds us, or second generation that succeeds us, is going to turn around and say, why did you sell our country off one piece at a time? Because we've got this huge amount of money that's obviously shifting to the rest of the world as we buy more and more. Now, I might add, we did not run a negative balance of trade until we started importing a lot of oil back in the 1970s from the Far East, or I should say the Middle East. Mm-hmm. And before that, we had run a positive balance of trade from about 1880 forward. It was a case that we were bringing money into the country. We could guarantee the rest of the world's currencies in terms of gold as a result of that, because we were always running a positive balance of trade. And we just aren't used to having this shift. And as I said, it's just like a rich company can start burning through their cash, or you've seen families that have inherited money that have burned through their family fortune in a couple of generations. We're doing the same thing as far as this country is concerned. We're burning through the wealth that we built up over that 80-year period when we had that positive balance of trade.
What about the claims that retaliation is going to cause some companies, like maybe furniture makers in West Michigan, won't be able to sell their products overseas because somebody's going to say, well, all right, if you're going to put these tariffs on us, we'll put them on you.
Well, that is a possibility, but once again, they're not stopping the trade. They're simply putting a tariff on it. The people at the other end will probably holler, but it will force them to look at some other source. And I don't know that they will immediately say, hey, we've got to find another source because we just have a 10% tariff, if you will, on products coming from the United States. And I have to say, I can't identify any particular product in West Michigan that they have put on their list right now of saying this is on our target list right now. They're basically going back politically and trying to look at the states that manufacture products that they think they might have some political leverage with. Particularly the farm states, because farm commodities is one of those things that we do sell in abundance around the world. When I went to school many, many years ago, we were called the breadbasket of the world, and we still are to a certain extent. One of our major exports is, of course, farm commodities, particularly corn and soybeans, and to a lesser degree cotton, rice, those kinds of things. So those kinds of things will be the types of things that they're going to probably come back and target.
Looking at your chart, China, $347 billion is the deficit. Then European Union, $146 billion. Then Japan at $69 billion. Germany, $65 billion. And Mexico, $63 billion. Those are the top five. And,
yes.
And then the interesting thing, and you pointed it out earlier, the next few countries, Ireland, Vietnam, Italy, South Korea, Canada, most of these are countries that just 25 years ago or so, they didn't import anything.
No. In 1990, we had a positive balance of trade with Canada. And we've just slipped over the last few years. But once again, in absolute numbers, Canada is still our biggest trading partner. We export $266 billion worth of goods to them, and we import $278 billion worth of goods from them. It's not a huge imbalance, we have to say. But nonetheless, this is part of the North American Free Trade Agreement, and the President exempted Canada in part for that reason.
Well, as he should have. I mean, if the trade imbalance was that close for all these other countries, I think we'd be in pretty good shape.
Yes, indeed, because we don't want to sacrifice our own markets. That's the case. Mexico is, of course, our second largest trading partner, and we really don't want to sacrifice the business that we've already ginned up in Mexico. And that's in part, as I said, the President said, well, let's take out our two largest trading partners. Our third largest trading partner, though, is China, and that's where we run a huge deficit. But looking, as I said, at steel and aluminum, the amount of steel that we get from China is 2% of all the steel that we import. The amount of aluminum that we get from China is 12% of all the aluminum that we import. 51% of our aluminum is imported from Canada. So, once again, these are exempt, I guess you would have to say, but it doesn't come back to the trade deficit that we actually have with China or that we have with these other countries, like I said, Italy, Ireland. The complaint that we get out of our merchants is that the door just isn't open very wide for us to go and sell there. But, of course, if we're importing steel from some country, chances are we're trying to sell them something else. So, you're talking two different industries, and there's a mismatch there.
Dr. Brian Long, if we want to look at your report and get more information, is there a place on the web we can go?
No, unfortunately, I can't think of a place right now that we really have it posted.
Well, I will post this trade deficit chart and some more information so that people can find more if they want. But it's always a pleasure talking to you and talking about the economy of West Michigan. We'll talk to you again soon.
I look forward to that.